David Kutla joins us, founder, chief executive officer, and chief investment strategist at Mainstay Capital Management. David, I don't know about you. I woke up to this thing. I'd never heard the word DeepSeek before, didn't know about this technology, this company, and what it means for the greater technology trade, but it's certainly having an impact on the markets here today. What's your take of this news of the day?
Yeah, good morning, Paul. I started hearing about it over the weekend, and it's, if it truly has the capabilities that it has, this is like a disruptor disrupting the disruptors of AI. We have a company coming in, open source, open architecture. Companies theoretically could do what they thought would be billions of dollars in infrastructure or costs. It would be mere millions, and that changes the landscape for companies like NVIDIA that have had a wide moat around them. And again, just depending on how this plays out, that moat starts to dry up.
So, David, how do you position now? Is it defensive then, because you want to sort of avoid what's happening? Is it a buy the dip opportunity?
Yeah, not defensive as in consumer staples and so forth, but look at who's going to benefit. We want to look at the companies and industries that are going to benefit from AI potentially being a lot less expensive to implement. So, that's good for more mid-sized companies as well as the large cap companies. In terms of industry sectors, we know that AI is going to revolutionize, or at least make significant enhancements in the healthcare industry and agriculture. I think there's too much emphasis right now on what this is doing to tech stocks, and the broader picture is if AI can be developed and implemented this cheaply, that means that much more productivity enhancements for companies downstream because they can afford to do it.
So let's step back here from the AI trade of the day here. We're getting into earnings season. Again, we're going to have a lot of technology companies over the next couple of weeks here. What are you learning so far about earnings season, and what do you need to hear from the remainder?
Earnings season's been going pretty well. We're expecting 12% earnings growth. We're pretty much on track for that. Some of the tech companies might be giving a little bit different guidance by the end of this week or during this week, because this is a significant infrastructure build. Energy companies, we have President Trump wants to drill, baby, drill. At the same time, there were companies looking at building mini nuclear reactors right beside their plant for their energy needs. Energy needs might not be there, so you might have a double whammy on energy demand and energy prices.
So in a broader sense, though, the thing I'm really thinking about is the U.S. exceptionalism trade that is totally consensus for this year. If that was really dependent on the AI scenario and the outperformance of the Mag 7, if that goes away, what does that do to a U.S. exceptionalism thesis?
Let's see what DeepSeek really is and what it develops into, right? Let's get the real story here, or what some are skeptical about, and maybe skeptical about for good reason. If we're as good as we are in the U.S. And around the world, and it was going to cost 60, 80, 90, 100 billion for a company to implement this, now it might just cost 5 or 10 million. That's the Sputnik moment for the AI industry, right? And in the arms race, the Russians surprised the U.S. by putting a satellite in orbit first. We just got a big surprise from China. No idea that they had this capability, if it's real, and how good it is or not. But I think the main point is that all those companies that were going to benefit from AI can do it in a less expensive, a cheaper way. And the tech companies, if some of them have already spent tens of billions of dollars for whether it's Blackwell or chips to come, to overall infrastructure, energy needs. It's not about them using DeepSeek. It's that there's a technology there that is competing with OpenAI that can be replicated, that is so much more cheaper, doing maybe not the same thing, but almost the same thing, same capability and quality as an OpenAI applications.
David, what is your tech call here today, and has it changed at all?
No, it hasn't changed at all. I think some have thought that this might be overblown for Netflix on this sell-off. I think depending on what happens with DeepSeek, we'll see if it's overblown or not, or overdone. But no, we still like technology. Even when you talk about the Mag 7, a lot of those companies are companies that are going to be benefiting from AI. All those companies are still going to be benefiting from AI. We're talking about the chip makers that could be in for a world of hurt, and we're seeing that in today's prices. And whether it's Netflix, Broadcom, all these tech-oriented companies. But I think we got to get the whole story on DeepSeek. It's almost too good to be true, right?
I mean, yes. But, investors got to move their portfolio. You're looking at NVIDIA down, speaking of, down about 309 points. Broadcom down by about 166 points on the NASDAQ 100. David, thanks a lot. David Kudla joining us there. Thank you very much. He's CEO, founder, and Chief Investment Strategist at Mainstay Capital Management.